Welcome back to Ferocious Education. This is Zed. Today I'm going to be giving an update on SNDL, Sundial Growers. What I'm going to do here is it's going to be a wholesome video where you don't need to really look at previous videos, but if you'd like more information, you'll find my previous DD in the description below that has almost everything you need to know about this one. Nonetheless, you're going to be able to, after watch this video, make an educated decision about the stock. I'm going to go briefly through technical analysis because it gives you an overview of the stock, trader psychology in there, as well as anything I could find about presentations, CD, etc. You can skip to that part if you would like. Let's jump right into the technical analysis now. Now, on a 1 week perspective, what we get to see here is it's a little bit sloppy, right? It's seen a massive jump and then started off the week a little bit high and then dropped and then back to a jump. So it's a little bit shaky on a 1 week perspective. But what we get to see is it still has some life. Momentum has been improving and you get to see that that's very substantial here. William %R is currently at a neutral level, even though the moving averages do look bearish, but on the 1 day perspective, it really does look bullish at this point. 80X shows in, hey, there's a high potential of an uptrend to form at this level. Remember, this was 13 cents not long ago. And then MACD says, hey, it's a little bit shaky here, but we can still see advances easily. William %R is overbought on the last trading session. But momentum here is a little bit choppy, going a little bit into the negative momentum. Moving averages are bullish. Now, on a 2-hour perspective, just for the next few days and whatnot, it's really bullish. It's seen a 750 jump, and you're almost seeing more of a cup on here. That is a bullish sign, but it also has massive volatility, like it going on from 24 cents all the way to 478, and then dropping back, and then back up. A little bit shaky. It's a little bit of a dangerous thing to hold. If you're looking to invest, that's a different story, and I'll discuss that later on in the video. Moving average band is expected to trade between 30 cents, 27, and 25 on the bottom. Volumes have been substantial. We're talking from 35 million to what looks to be like an average, I would say somewhere around here, around 300 million shares. So look at that. Volumes are massive compared to previous historical charts. Stochastic fast and stochastic slow. What we get to see here is they both are showing, hey, there might actually be another curve, another trend up. It might be time to buy either for a short term or at least swing it up. Looking into the Fibonacci retracements, now I wanted to go all the way back. I couldn't really find a good place to go for, so I went for the year. Just because if I go all the way back, Fibonacci retracements doesn't work well. 104 is the current resistance, 158 and 203 followed by 247 as Fibonacci retracement resistance. Now we're going to do the traditional one, and then support we can get to see it to be at 30 cents. That's a significant one. Above there, 34 and 35, and then we're going all the way to 37. Now you can definitely go all the way down to 28 and then 25 and then lower down to 20, but let's be optimistic. Current resistances are sitting at 40 cents. Above 40 cents, we're looking at 44. Above 44, we're looking at 47. Above 47, 54. And then all the way up to 62. Now, yes, we do have short one at 60. But 60 to 62, it really was following this resistance around here. Alright, now comes to the DD part. Sundial. What are we selling? Well, it's obvious. It's weed. Now, this is all legal. So at least here in Canada, where it is. Sundial, they have different products. I did go in depth in my previous video, so you can watch it after this one, about all their different products in there. So they have Sundial as the brand itself, the general brand, and it's a modern natural alternative. You got the top leaf, which is a craft kind of style of weed, which basically is a little bit different with having a little bit higher potency. And then they got their BC Weed Co., which is a little bit of a different brand as well. So if you go back into their presentation, which I did go on last video, you'll find the level of potencies, the price level, and their market share, as well as which province in Canada likes which one. So we got like the Palmetto one, that is a handy cannabis that if we're looking for quality and consistency, including pre-rolls or disposable vape pens. And they have Grasslands, which is basically a strain of cannabinoids and terpenes. Instead, they provide simple, affordable option for cost conscious, so it's more of their budget cannabis. So they have everything from high quality to budget to middle tier. And they have vapes. Now they're moving on to edibles. They have buds, roll-ups, and that's as much as I know. Well, at least that's as much as I know in terms of things coming up in my head right now about weed products. I myself, I'm not a user, so if you're looking to know about the quality of these kind of products, the best thing is to find someone who does smoke it up legally in Canada and uses their products, and they can tell you about, hey, whether it's good or not. I myself, I have no clue. Now, third quarter financial highlights. Branded net cannabis sales increased 77% of total cannabis sales from 69% in previous quarter, as Sundial continues to transition from reliance on wholesale to brand retail sales. Net cannabis revenue for third quarter 2020 was $12.9 million, a decrease of 36% over the second quarter of 2020, primarily to focus on branded retail sales. Currently, they have a relatively stable gross selling price at $5.53 per gram, equivalent to $5.67 from the previous quarter. Principal amount of debt outstanding is $23 million. During the third quarter, a total of $100 million of debt has been eliminated to the year due to current cash on hand standing at $60 million. So they have enough money to pay off their debt. That is really good. Cash used in operations increased by 63% to $5.3 million for the quarter, not including the changes in non-cash working capital, financing, and investing activities, from $14.3 million during the previous quarter. That is bullish. They decreased their cash used by more than half. Dried bulk cost per gram sold was 1.18, a decrease of 12% from the previous 3 months. So they decreased their cost, they decreased the cost of operations, the cost of products and the cost of operations. That's amazing. General administrative cost was reduced even by 7%, so that is amazing. While increasing capital, because capital rose provided by around $26.4 million during the quarter and $48.1 million subsequent to the end of the quarter. Now, total of $4.1 million was received under the Canada Emergency Wage Subsidiary, so it's also getting bailed out from Canada. Net loss was $71.4 million in the third quarter, adjusted EBITDA lost by 13% over previous year's quarter of $4.3 million and $3.9 million. So there is quite of a massive loss, $71.4 million. That's quite interesting because I want to look into the property, plant, and equipment impairment provision of $60 million was recorded in the old facility. Okay, take a quick look into the cash. The cash that they have on hand is around $60 million. Their current net loss was $60 million. So let's jump right into the actual numbers. So if we're looking here into their actual sheet, their 10Q sheet, the balance sheet, we're looking at total assets of around $227 million compared to $510. So their cash equivalent in hand, they said they have around $60 million currently. That's not reported here, but we're gonna brush over it. The next thing we're looking at is liabilities has decreased, and that's good. We're looking 151 compared to 288. Next thing is their accumulated deficit is around 500, but that's kind of is a little bit balanced out. It's a little bit more than what you had last time. The gross revenue is around 15.5, which is worse than your last year, but in terms of 9 months ending, it's almost around equivalent. Your net revenue is 12.8 million compared to 28 million, and that's a little bit bad because your your taxes, apparently excess taxes, that's a little bit higher. I do notice that, but your cost of sales here, as you can get to see, that also is higher. So what you get as a gross margin from what you had as 13.5 million in profit, now you have 19.5 in loss. So compare the business 9 months ending September 30 to 9 months ending 2019, you're looking at a 45 million loss compared to 34 profit. So that's a massive difference. And when you're looking into the comprehensive loss, yes, they did have a worse loss last quarter or last year on year comprehensive loss, but the majority of it you can get to notice from last time was net loss from discontinued operations. You're looking into loss on financial obligation, but I'll take it as the same level, right? So we're going to count it to be as a comprehensive loss over here at 101 million loss and then we're getting 71 million lost the current time being. And so at the end of the day, sure, they decreased the loss, but take a quick look into the 9 months. Doesn't look good. 175 million loss compared to 130 million. And just keep in mind, they were profitable previously year on year. In last year in 2019, 9 months up to September 30, they were profitable. So that is one thing that, you know, kind of opens my eyes on it, and I'm like, they need to fix a little bit of their balance sheet because it doesn't look good. It looks like it's heading in the wrong directions, but overall it looks good on paper, but there's some things you need to fix. For instance, you can't do anything about taxes, but you can do things about cost of sales. You get to see out of their gross revenue, they decrease their cost of sales, and I see that. But their inventory obsolescence, 20,000 gone there. If you fix this, their gross margin at least marginally becomes profitable. That's what they need to fix. Nonetheless, I'll say, you know, perhaps it was a fluke and it's not going to happen again. So I'll give them the benefit of the doubt. All right. Next thing we're looking at is their edibles. So I believe it's right on here. Yes. Sundial partners with Chocolate to enter the Canadian edible market. Chocolate is an Albertan company. And so they're going to basically have chocolate right here. As a part of contractual agreements, Sundial and Chocolate will launch a cannabis-infused brand offering a selection of chocolate bars, drinking chocolate, and infused sugars, all containing 10 milligrams of THC, the highest amount legal to sell in a single edible serving in Canada. Both companies expect to sell in the collaboration across the country, with the first product targeting to be in stores ahead of the holiday season in Alberta. Next thing they have is the big catalyst, well actually multiple catalysts coming up. December 2nd, they're going to be in a conference in Cohen's Boston Cannabis Conference. Where's that? In the US. So that is something to be considering, because hey, why are they interested in the US all of a sudden, right? And it's not all of a sudden, but yeah. It's because of the next point I'm going to make. December 2nd, 10 a.m., 10 a.m. Eastern Standard Time. So keep your eyes up there because you might see a jump. Before heading to the actual news part, institutional buyers seem to be a little bit on both sides, a bit more bullish than bearish in that, so that's good. And then insiders, nothing. The biggest thing is that the full house is set to vote on the marijuana legalization next month. And the vote is going to either happen on one of the two sessions, either on the 1 to 4th, December 4th session, or the December 7 to 10 session. Not clear which one. What I'm talking about this bill here. I actually wanted to do something different, but let's zoom in because small. All right, so it's the House bill that was introduced on the 23rd of last Jan, Feb, March, April, May, June, July of 23rd of July last year. Marijuana Opportunity Reinvestment and Expungement Act of 2019. Now this has been delayed multiple times and it's long due, but if you've ever read it, here are some of the findings. And this is from 2019, so it's a little bit updated. The communities that have been most harmed by the cannabis probation are benefiting the least from legal marijuana marketplace. A legal legacy of racial and so this is injustice about 80 years. 33 state District of Columbia, and they mention them, have adopted laws legalizing cannabis for adult recreation use. A total of 47 states have reformed their laws pertaining to cannabis despite Schedule 1 status of marijuana and its federal criminalization. Legal cannabis sales totaled to $9.5 billion in 2017 and projected to reach $23 billion by 2022. According to America's Civil Liberties Union, enforcing cannabis probation laws cost taxpayers approximately $3.6 billion a year. And it goes on and on and on. And so, in all retrospect out of this, we can get to see that it's going to be beneficial for the government to legalize it. And a lot of states have already legalized it, but we're talking about states, for instance, where we're talking about federal legislation, federal legalization, which is supposed to be different and will open up the market for legal cannabis even further. In red here, that's the recreational licenses allowed for cannabis, and the blue ones, or CN, depending on your screen, or even Green, it will be medical use, or it is actually currently medical use. You got a whole lot of different states on here that don't have it legalized, or at least for recreational use. So that is something to consider, especially with Biden's campaign a little bit, having mentioned legalization of weed already. And so, what do you think is going on here? Alright, so aside from the balance sheet that is a little bit worrisome, I'm going to give him the benefit of the doubt that they can fix their balance sheet. And their cash flow, that's a massive thing, right? You need to be profitable. Otherwise, they're going to just keep throwing on offerings, whenever they can. I believe this one has a future. It's going to have pumps and dumps here and there, so be careful of that. Very careful of that. But with the US market opening, if they play their cards right, they're going to make some serious bank. And so, yes, if they still have a path forward to actually reaching that level. Now, are we talking about reverse splits here and there? Hey, possibly they still have some time, but yeah, later on in the future if they don't reach it, offerings. So you gotta expect these kind of things, unless they actually come out in the conferences December 2nd. So you expect something to reach out there and jump closer to there with the House voting, whether it's December 1 to 4 session or December 7 to 10. If it passes, that's another catalyst. You'll see a jump. January 20th with Biden inauguration, you probably will see a jump on this. So you can make sure you can trade these ones and start playing with them. You know, make some money. If you're investing in this, it's definitely a little bit of a dangerous one, but there's a lot of hope for this. What do you think about this sticker? Make sure to mention down in the comments below. Share, subscribe, and like. You have a wonderful day. And if you've survived this far into my video, you'll find a link into the Discord where you can ask me any questions, and I'm very active on there, so I can answer you quite quickly. Have a wonderful day.